Time for another stock review, this time Main Street Capital. Ticker symbol MAIN, Main. I love it. We're going to do a full review of this stock. It's requested by one of our members. It's being made in a live stream. And we're going to go through the balance sheet, the profit, the loss, the margins, who owns the stock, who's selling the stock, inside trading, all of that wonderful stuff. Then we're going to show you the analysis here, give you a full breakdown and the grades and so on and so forth. A quick look at the chart. You can see there it's trending up very much like the S&P 500 apart from 2020 with COVID. It did exceed a bit of a drop. We have a back test against the S&P, looking nice there. Also, the history of dividend payout. No point having a great dividend if you don't pay it out very often. All of that's coming up in this review. I hope you are interested in investing and you find this interesting. So we're going to find out if this stock makes money and if it's worth investing in. So let's get straight into it. Does it all add up? Well, here we go. We're going to turn the money printer on and see if we can make money from the stock. We're going to review all the charts and the numbers and the fundamentals. We're going to have a deep dive, a deep look, and hopefully we're going to find out whether this is worth investing in and you feel it's something you are comfortable to buy. Remember, I only own the S&P 500. I'm not here to pump and dump anything, but I'm here to give you impartial, real information at your request that my members have asked for. So let's get straight into it. Tap the like button. Welcome to the show. My name is Martyn Lucas, voted as the World Piano Man, also known as the chairman of YouTube. Here is my wonderful chair bought for me by the Lucasades, the members. You can see my logo, M for Martin, L for Lucas, or Leah, by the way, Martin and Leah, if you want that there. The United Kingdom from me, Leah is from America, and you see the microphone in the center. Can you see that? There's a microphone in the center with a crown at the top. That's because I'm from a royal country and the king of the microphone, otherwise known as the chairman of YouTube. That's what this is all about. Wonderful. My members, Lucasades, bought me that. It's also got a logo on this. I can never quite get it right. See, it's also got a logo on the back, the inside of the chair as well. Can you see that? There you go. Pretty cool, right? Okay, let's get very comfortable too. Let's get into this next review. So what is Main Street Capital? Well, we're going to start from the beginning, nice and simple, and then we're going to go down to the greater depths. So tap the like button if you like this and consider subscribing as well if you'd like to support our channel on our road to 100,000 subscribers. Main Street Capital Corporation is a traded business development company which invests in lower middle market companies with revenues of 10 to 150 million and EBITDA of 3 to 25 million. Located in the United States, the fund targets companies operating in the fields of business services, commercial and professional services, communication, consumer, discretionary, energy, finance, healthcare, industrial, information technology, bit of all sorts, I think you'll agree. We'll scroll down a little bit. We're going to read every single one of those. It acquired both minority and major positions and provides financing for senior secured term debt, recapitalizations, management buyouts, refinancing, and growth capital requirements. Okay. The CEO is Dwayne Louis Isaac. Now, if you'd like Dwayne on the show, you can. We have a Meet the CEO series. If you are an investor, you simply email Dwayne, Investor Relations, or the Investor Relations Manager, and tell them you're an investor and you'd like them to be on the show so we could learn more about the company and you can invite them on and we can move from there. So there you go. Houston, Texas, just down the road from me. Okay, I could go down and see them, couldn't I? Average volume, 566, very low volume. So if you are trying to trade it, you might have to wait for the price you want. Not much action going on here. Low volume. Dividend yield, 5%, 5.03. A nice high-paying dividend stock. And this is interesting because a high dividend stock can it compete with the S&P? You gain in one, you lose in another. If it's a high growth stock, you don't have dividends. If it's a high dividend, the stock probably goes down. So let's see if you can how this compares to the S&P. We'll do a comparison in a moment. The PE ratio is 10 times earnings. Well, that's a third of the price of the S&P, so that's nice. So if it can compete with the S&P at a third of the price, you're doing well there. All right. Market cap 5 billion 0.13. Let's have a little look. We've got some news on. I just spotted that one there. Cash dividend on the way from Main Street Capital. We'll come on to the dividends in a moment. All right. Now, see, this is Morningstar. Say it's a hold. No one's buying right now, but it's a hold. All right. No one's selling either. Shall we have a look? More importantly, as Robinhood so much, is hedge funds. What are they doing? They were trimming, but that's very small trades. That's just auto trading. That's not an issue. I'm not worried about that. What about insiders? Wow, that's interesting. Back in April, a big buy-in there from insiders and nibbling away, a little bit in, a little bit out. That's all taxable. Automated tax transactions. If I went through, which I don't need to because they're very small, I would know. I'm not going to waste your time showing you, but I can guarantee those insiders aren't doing manual selling. They're doing automated tax positions. So there's no issue there, but I did like to see that big buy-in at the beginning. That was good. All right, let's have a look at the earnings. They've been consistently beating earnings. So you can see that. Nice. They've been outperforming what Wall Street are expecting, and it's been increasing, at least Q4 to Q3. $1.03 expected, 108. That's good. We like that. Very, very good. Who else is buying the stock? Tells us how it trades. Realty Income. Stag Industrial. Okay, I get the idea. Altria. Schwab, oh yeah, JP Morgan, AT&T, Coca-Cola. Okay, which means you are in the big boys club. You're in old money, solid money, reliable money, good. Institutional money, that's good. So it's not a tradable stock, this one. This is you buy and own. And you can see that on the max level there, you can see that looks very, very nice indeed. A bit like the S&P, just didn't do so well during COVID, but it gave a bigger opportunity perhaps. So when there's macro conditions, you can double down on this one. So it's looking good so far. I'm liking it so far, but let's go now further in. So if you like it so far, please do tap the like button and consider subscribing to our channel. Let's see now if you can make some money on this stock. Is it going to, whereas I've got a little scene here, got a few scenes I want to share with you. Is this stock going to take off and go to the moon? Are you going to be climbing down the steps of the ladder as you land on the moon and looking into the face of the dark side of the moon going, I made a ton of money? Well, we're about to find out whether this stock adds up and you can count your winnings. Before we turn the money printer on, let's have a look deeper into this stock. Let's get into it, shall we? And see what we can find. So far, I'm kind of intrigued by this one. Looks good. Thank you for the request. So let's have a look. We've got some news here. This is on the recent earnings. More detail on the earnings. What do we have? Well, let me share with you. Main Street Capital. 1.2 misses by 0.01 revenue, that is. Hang on a minute. Let me just double check that. Always like to double check our numbers. Let's have a look. Estimated 103, actual. So Main Street 102 misses by 0.01. 140 misses by hang on a minute. February 27th. This is interesting. This is always worth Main Street press release, Main Street Capital. Can anyone estimated 103? $108. We've got a discrepancy there between two different sources. Robinhood said they did 108 but here we're saying they did 102. Well, that's interesting. Two verifiable sources providing slightly different numbers. This is a definite beat, and over here misses by 0.01. Exactly the same stock, though. That's very interesting. That's very interesting. Let me read a bit more of this, but two, especially Seeking Alpha Pro level. This is the actual transcript. Misses 0.01. Well, if anyone has a clue why that would be, I'm confused why that would be different. Anyway, distributable nil. You could be so careful. This is online data. You know, you always have to do your own research and double check everything. It's not always accurate. Very rarely wrong like that, but that's very interesting. Total investment income 140.44, misses by 0.96. Distributable nil of 1.08 per share. Net value of 31.65 per share. Net increase in net assets resulting from operations of 174.2 million. Return on equity 25.4 on an annualized basis. Net assets of 31.65 per share as of December 31st, representing an increase of 108 per share. Hang on a minute. Net asset value of 31.64 per share. December, right, representing an increase of 1.08. I see. So that is correct. 1.08 compared to 30 per share, or 3.5% compared to 30.57. Okay. Now I understand. This is the right figure here. Yes, this must be a typo up here. All right. It's always worth just checking yourself, not just assuming what you're reading. Always think of what you're saying. But that makes perfect sense. They put it there in the data. Anyway, stronghold, a hold, Wall Street, Quant, and Seeking Alpha. Evaluation, A-, same as last time. Growth is D+. We've lost some momentum when we can see that. It was at A- 3 months ago. Profitability, A+, that's the same. Momentum has moved up from C- to A-, where we can see that. We can see momentum is up. Revision C- up from F. That's an improvement as well. Okay. What about the forward PE? Have we got a forward PE? Yes, we do, because the lagging indicator shows us. Let me go back up to here. The lagging indicator of the PE is 10. And now the forward PE, which is normally better if the company is growing, is 14. So its growth is slowing down there. Its guidance is down. All right, see that? Look, the forward PE is 14. There's only short interest. Well, 4%. That would make sense because things aren't going quite as well at the moment. So short interest is 4.11%. All right, okay. Now let's move over to the chart. We talked about 2020 when everything sold off. That was COVID, bounced back. And the reason for showing you that is look how it compares to the S&P 500. We'll do a full back test, which is this one here. If you put $10,000 back in Main Street in 2016, so we're 8 years, not too much history, you've got a 4x, $41,000, way more than the S&P 500, 10,000 to 33 in the S&P. Visualize that. There you go. There is the drop through COVID. It really did drop. So if you bought here, you did really, really well on this stock. Starts tracking the S&P again. Some days you're ahead, some days you're behind. But recently, since October 31st, remember I've said to you that the financial sector is doing particularly well. There it is. It's outperforming the S&P. Tech's going down. So that makes perfect sense. Makes perfect sense. Interest rates the way they are. Banks and institutions and financial institutions making money. So that's expected. So that's good. Outperformed. It certainly didn't do too well in COVID. It didn't like that. But so bear that in mind. If we should get something like that again, it's likely to fail. And this is with reinvesting those dividends. So this just goes to show, folks, until very recently, it kind of tracks the S&P. And that's an important lesson to learn there. You might go, it's really high dividend. It's fantastic, way better than the S&P. But if you reinvest the dividends, that's your performance. If you didn't invest the dividends, it'd be way lower. So the growth would have been lower. This is the performance with the dividends. That's why that's so important to do a back test like this. If you do a back test, you fully understand the differences. And if I put here reinvest dividends, you see how it outperformed it. Let's see if this makes a difference. It should do. It's going to look silly if it doesn't, right? Reinvest dividends. Can you see here? We reinvested the dividends. Let's say we didn't. So see how it performs without those dividends. All right. There you go. Phew, that worked out. That's called experience, folks. Live on air, I did that just to demonstrate the point. Would have looked silly if I'd got that wrong. So I really would have looked silly, wouldn't I? But there you go. 4 years of doing this, I've learned something along the line. So anyway, there you go. If you take out reinvesting the dividends, it's underperformed the S&P. Now, this is a very important lesson when people get excited about high-paying dividend stocks. It outperforms growth. It doesn't. They work hand in hand. This is underperformed. Now, if you were underperforming here and you got those dividends, you go, I've done great. Well, you haven't done great if you then took the dividends out and spent them or lost them or invested them on Binky Bonk, right? You've lost the money. If you'd reinvested them, you would outperform the S&P. If you didn't invest them, you've underperformed the S&P, and then it's down to you what you do with those dividends. Now, if you just get them and spend them and lose them, whatever. But if you reinvested them, this stock outperforms. So this is a very nice stock, this one, because it has a good growth and a paying dividend. It's kind of got it all. Put the two together, same or thereabouts as the S&P. Recently, because of finance, it's outperformed because the S&P, as we know, is tech heavy. And once again, I will show you that. I shall replace the dividends, reinvest the dividends, and I shall say yes. We'll reinvest the dividends, and you'll see now it outperforms, matches until it outperforms the S&P. So there is a perfect example of fully understanding the value of reinvesting dividends. Now, what you can do is rather than automatically invest them every month or quarter, whatever, is save them up, earn 4% interest. If you're not in margin, you could do that and buy these dips, and then you could even improve on this even further. So you could actually done even better than this, and this is already quite good. All right, I'm loving this. I'm really glad to be able to show you these different elements, and I'm also very pleased to see that I knew what I was talking about. It's kind of important, right? Let me come back to the stock, because for some reason I've just taken it off the screen. So let me come back to there. It's always nice for me as well, as I learn things more and I do these things more. It's nice to know what it will be before you do it, and then when you do it, you get, yeah, see, I knew what I was doing. It's always nice. It always makes you feel good. You learn more as you go. Back yourself up. Right, now then, the next part, as we just mentioned, dividends. Well, dividends are great, but they're only great if they pay out, because a dividend-paying stock with growth without the dividends isn't growth. You'd see it underperform the S&P. So because you bought a dividend-paying stock, it doesn't mean to say you're going to get paid every month. Vanessa's just informed me that the bell went. Sorry, I missed it. I'm in the middle of a review. There you go. The bell had gone 7 minutes ago. No idea why I'm ringing the bell, but there you go. So let's carry on. So let's look at the dividend paying history of Main Street, because if you're not going to get paid regularly or it misses, but you bought it for the dividends, then you're going to underperform the S&P. It's not going to work. So is it a dividend king? Well, we need 25 years, 50 years, aristocrat, king to qualify. I don't think this goes back that long. I don't know. Let's have a little look. And let's see if it always pays out on time and always increases. So we're going to go back now to 2012. That's as far back as we can go. So it's not going to have the history of Coca-Cola, Johnson & Johnson, but nevertheless, I think you'll agree, quite a decent period. So, and remember, the amount you get per share, this is 14 cents, is not important. It's the percentage which is important. If you had a 1 cent stock and you got 14 cents, that would be the best stock in the world. Well, if you had $1 million stock and 14 cents, it would be the worst stock in the world. So don't get excited or unexcited by that number. It's the percentage, right? And then it's the percentage in relation to the growth as well. And we've shown you what you get with the growth, with the dividends invested, so you can see exactly what's going on there. So what we're looking for is not how much this is. We take that out. We know the performance is, does it always pay? Does it miss? And does it increase? That's all we're looking for to give this a 5-star tick and go, this is a potential buy, all right? So back in 2012, so we're going to zip through this, 14, 15, 35. Oop, we dipped that to 15. We had a little, that was probably an extra payout. When it jumps like that, you get a bonus payout. In fact, and this is monthly as well. In fact, you can see it. You can see that there because it paid out twice in January. See that? 15, 23rd. We're paying monthly. It's a monthly payout. But we got 2 in January. So it would be a bonus. They are. I love it. I love it when I'm right. No, seriously, I know I'm laughing and joking, but when I actually see that I'm right before I look, it makes me feel good because, you know, experience is the most valuable asset that we have. And if you start to see patterns and recognize things before you see them, that helps you invest. You recognize things. So that was great. See, I recognized that was a special before I looked. That was a bonus payout twice. So in other words, what happens there is you're getting a regular payout, but the company's performed better than expected. So we give an extra bonus. Now, that's nice, but it's also nice because they acknowledged it. They didn't have to do that. They could have kept it, but they didn't. It's good. So you got the growth and the dividend, right? This is a good stock. It's a well-managed company, good for its shareholders. So it's a good, we're loving this one. 15, 15, 15, 15, 20, 20, 15, 15. Okay, was that a special? Yes, it was. Another bonus in July. All right. 15, 16, 25, another one. They like paying their bonuses out. In addition, good. 16, 16, 27, there it is. There's a bonus. 17, 17, 17, 27, there's the bonus. 18, 18, you get the idea. It's paying out all the time. It's giving bonuses. It's increasing. Growth is up. It's a strong stock. It's a well-managed stock. You're getting bonuses. An extra one there. Look at that. This is nice. This is a very friendly stock for an investor. We are loving it, loving it, loving it. We're 20, 21, 21, extra bonuses. 21, the extra bonuses. 21, 21. We're in 22 now. 22, still going up. We're loving it, loving it, loving it. 23, 23, 23, 27 with an extra bonus. Very, very nice. Look at that. Look at that. Look at that. 24, 30s. 24, 24, 25. This is very good. Yeah. And now we're up to 13th of June 2025. This is declared. They've already declared it. Bloody hell. Wow. They've already declared what they're going to pay you. Well, this is exemplary. exemplary. To declare what they're going to pay you in June, very, very nice. Wow, very good. So that's a great dividend structure. You know what you're going to get. It's increasing. They're giving you bonuses. They're even telling you what they're going to get in June. I mean, what do you want? To be told what you're going to get 6 months ahead? Wow. That's a nice run company. That's a good one. I'm liking this. This is one of those stocks I go, I like this one. If I wasn't buying the S&P, I'd be all over this one. All right, this is a solid business. I like this. I like it a lot. Right, we've done all of that. We clarified all the dividends, yada, yada, yada. Okay. Now let me give you the numbers itself, balance sheet, and so on and so forth. Okay. Now then, let me go over here. If you tap the like button, that would really help, and consider subscribing. I'm loving it so far. I'm loving it. This is good. Now then, let me go to the next part of our review. Here we go. So, intrinsic valuation, which is reliable, is saying overvalued by 11%. Well, it's a growth stock. Growth plus a dividend's got it all. 25% I can overpay, because you're never gonna buy undervalued growth stock. It's like the S&P. You've seen it outperform the S&P with a dividend, which gives you bonuses. But again, if you didn't have the dividends, you'd just end up in the S&P, just outperforming it. So let's just not get carried away. Okay, but overvalue 25%. You can't. 11% is what this is. Base case. Worst case 28%. See, even worst case, which we're not in, it's still doable. The PE was good. The forward PE way better than the S&P. Best case 17%. So it's the right time to buy as well. It's the right time to buy. This is a buy from me. I don't need to go any further. This is well-run, solid business. I like it. I like this. I think it's good. Oh, now we get even better. So we got 541 million. Okay, it's not a massive company, of course. But anyway, up 2%. Now, expecting to decline in 26. I don't like that. Don't know why that is. I guess guidance is weaker. Well, that makes sense. They've just reported. Everyone's saying guidance is weaker right now, so their expectations of a slowdown. That's genuinely expected everywhere. So I've been saying that for ages. But even so, we're up. Operating income is flat. Net income up 7%. Free cash flow is negative 11%. Operating cash flow 11%. EPS up 8%. Assets 5.1 billion, of which 78 million is cash. That's about the right proportion. Long-term investments 4.9. I like that. Long-term debt 2 billion. That's 91% long-term debt. I don't like a company with massive amounts of debt though. But this company will have debt though. That's what this company does. It's a finance company. So it's going to have debt. It's like a bank, lends money out. Okay, so I've got to see this a little bit differently. We've got to look at the performance of the stock. This is a bit different. 77 gross margin, operating margin, net margin 93%. Bloody hell, this is a cash cow. Look at that, 93% net margin. Whoosh. Woosah. FCF margin, negative 16%. ROCE. Now, if you want to know what the definitions mean, you've got my software. I'll put in the chat for you now. Those of you watching later, Seeking Alpha Spread, below in the description and pinned to the top. You can go and check that out, and you can get free trials, and you can get all these things, and you can have the software that I use for free, and so on and so forth. ROIC, ROA, ROE, 19%. Okay. Profitability, 57%. Low Altman score, 37% solvency. That's because of the debt. But this company can live with debt. Makes sense. Different. 57% profitability. That's good. Interest rates coming down. It's going to be good. Well, there's two ways of looking at that. Main lowest forecast, 21%. 7%. I don't think we're in this territory. We're certainly in the average, I would say. 7% downside. Now, you've heard me mention these before. Not that much of a downside. So, in other words, with this one, if I had $1,000, I'd probably put 700 in, keep 300 left over to buy a dip, and then I'd go all in. If it was 20% down, I would ladder in. But it's 7% downside, I would just have 700 put in, leave 300. When it drops, put the other 300 in, lower the average. I'm okay with that. That's what I would do. 13% upside, you might recognize that number. I talk about 13% all the time. 13% is what I value the S&P if you buy the dips. So you could just buy the S&P and not do any of this. But this is a better value. Looking at the PE. But it's got debt. So you could buy the S&P. Doesn't really matter. If you like this one as a dividend, if you want a dividend paying stock, this is a way to own the S&P with dividends. If you want that regular income, I don't need that. I don't need an income. I've got a job to earn my money. I just want the stock to grow. I don't want an income. Remember your charge tax on income, not charge tax on growth. We talked about insider trading. Sold. These are nothing. Look at that, 495,000. Nothing at all. No issue there. Right, let me wrap up. Interesting stock, this one. It's got a good management. What did they give you a rating of the management sometimes? Let's have a look. Do they do it on here? They sometimes do it. They give you a rating. Let's have a look. No, not this time. If you want a stock that performs very much like the S&P, it was slightly more affected by COVID than the S&P was, but it would be. Didn't have the different sectors to protect it. Outperforms the S&P by reinvesting the dividend. This is the way to go if you want income. Income as in dividends. But remember, you pay tax on those dividends. So even though that growth helped perform the S&P, a lot of it was because of what you were earning on dividends. But you pay tax on the dividends. You don't pay tax on growth until you sell. And if you haven't sold for at least a year, your tax is lower. So if you don't need the income, you're better off with the S&P. If you want a regular income, this could be a stock that you move into when you've retired. If you don't want to borrow against your money, which is what I want to do. If you don't want to borrow against your money, but you want to receive a regular income, this could be the way to go. This could be the way to go. So it's a very interesting one. I kind of like this one. I think it's good. It's interesting. It's definitely one for a specific trading style. I love it. Oh, okay, there you go. Click above my head for all the links down below in the description. I think we covered it all. Pretty sure we did. We did the back test. We did the dividends. Yeah, I think we're good. All right, so there you go. Making Street Capital above my head, down below in the description. Also pinned to the comments. You'll have all my links, other stocks, the playlist, the software that I've used. You can get a copy of it. Over here, I shall put the Main Street playlist. Down here, I'll put the Alpha Spread playlist. That's where I've done all my reviews. Way over 200, maybe 300 stocks now. And if we get any more news or we cover the earnings or whatever, then it will go in the playlist for Main Street Capital. That's it from me. Until next time, as always, take care of yourselves and each other.